Hello there. Welcome to today's session, our U.S. pre-market analysis. Walter, welcome. We'll get ready here in a few seconds. Okay. We'll get going in a few minutes now. Let me just get everything situated and we'll start looking at the charts, looking at the markets, looking for opportunities to trade. Just give me 1 second here. Alrighty. 8 o'clock. Welcome. I'm Gio Benacourt. We're starting a brand new service for you on a daily basis from Monday to Friday. I will be doing a U.S. pre-market analysis 30 minutes prior to the U.S. session open. We'll look at the markets and then we'll fall into half an hour after. It'll go for an hour where we'll look for opportunities for trading. What type of strategy we can set up and things like that. All right, let me get the disclaimer out the way. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. About your host, I'm Gio Benacourt, Senior VIP Market Analyst, Market Educator, and Demonstrator of Strategies with Vantage. I have over 20 years of experience as a commodities trader, and I hold a Series 3 license, also a CMT candidate. The agenda for today, we'll look at the economic calendar, what's moving the markets, identifying key levels of support resistance, and trading with Fibonacci tools and others. About Vantage real quick, the markets we offer, over 1,000 instruments, over 100 chart patterns, over 100 plus technical indicators and drawing tools, offer CFDs on Forex, indices, shares, commodities, cryptocurrencies. What we stand for, lightning fast execution, award-winning 24-hour support, intuitive tools, global connectivity, and strict regulation. All right, I like to start with the idea that we need to have identify clear, consistent trading habits. Now, you say, well, being comfortable with the prospect of losing money if the market goes against you. Is it a habit? We all want to have winning trades, and I believe the record was made by a person named called Gann, who had like 100 plus consecutive trades, winning trades. So that's something of interest to learn. But in reality, well, obviously we do want to be comfortable with a losing trade and just obviously analyzing afterwards why you lost. Emphasizing risk management. I look at using risk percentages when we talk about trading. You want to talk. You're looking to talk percentage wise, so psychologically you can help yourself out. Then volatility can spike and spreads can unwind. So why not reducing leverage when that happens? Yeah, you won't make as much, but you won't lose as much also. Then we have stop loss. Always use the stop loss. All right, having them will help you. And obviously having a trading plan. Those may include identifying trends, timing and exiting your entries and your exit points, risk management, confirmation and validation of your trade. All right, so I think it's first important that we have a shared common vocabulary for what is technical analysis. So let's dive right in there. It's just a form of data visualization, obviously. Charting, displaying market data in lots of different data visualization modes is a big part of where technical analysis come from. but you gotta go back hundreds of years to the rice mills of Osaka, Japan, for a gentleman named Munisa Homa, who invented it, the Japanese candlesticks, as a way to try to capture all of the behavior of traders in those rice pits. We've of course advanced in the discipline over hundreds of years, and there are lots of different chart types. But what I'm going to argue to you now is that technical analysis is far more than just collecting data and displaying it in a way that we can interpret a lot of information quickly. Welcome, Rihanna, Andy, Abdul, Walter. Welcome to today's session. We'll get ready in a few minutes looking at the charts. Well, all of this is part of it, but if you look at definition from some of the early texts from the 1920s and 30s, like guys like Edwards and McGee, who said technical analysis is about the study of the market itself, all of the price action, all of the investor behavior, everything that is happening in an open, freely traded market is part of our discipline. And I love that definition because it is quite broad, and hopefully through today's session you'll understand just how broad and the depth of study you'll go through. We also know that the technical analysis is a study of that supply and demand relationship. We care a lot about the behavior and the psychology of investors, as is one of the hardest things to quantify when you're thinking about investment decisions. Now, I'll argue it's all represented in this beautiful little element called price. And the last definition I'm going to pick on a widely cited author, Perry Kaufman, who says it's a systematic evaluation. And systems, the reason I bring this word up, is that a lot of us have heard about algorithmic trading, high frequency. You might be an advanced programmer, you might know Python or R or many other languages, and that is an important way to express some of the ideas. But even if you're not a coder, you're not an algo trader, you should be thinking in terms of systems, a rules-based, repeatable approach. And that's something that was drilled into me as I went through the program. And the last 20 years that I've spent, I was surrounded by some of the best money managers in the business, is that they have a defined, repeatable process or a system that they follow no matter what the market is doing. So we call it trading plan. All right. A quick refresher from your Economy 101 class. All right. Remember, at a fixed rate of supply, an increase in demand is going to move us up the price equilibrium, or a decrease in demand will move prices down the equilibrium. So when we're thinking about an open, freely traded market, demand, greed of investors is inherently pushing prices up. And fear or selling pressure is going to push price down because it's a fixed supply. I want to hold that thought because in your mind, because it is perhaps one of the most important parts of the magic that we're trying to unlock here, or the message of the market that we're trying to decode, which is related to learning that if you take emotion, there would be, or there could be, or there should be out of your decision making, and if you look at just what is happening and you can quantify that, you have a big advantage over most human beings. And I'll argue for all of us in the investment discipline, there's a lot of emotion tied to those trading decisions that we make each every day. And we all know it by FOMO. So obviously we don't want to fall into that. Now, those emotional impacts on our decision making can be very negative. So the more you can remove your emotional and cognitive bias from your decision making, the better chance you have of staying on the right side of trends. All right, so let's. I'm gonna stop sharing my screen for a moment. I'm gonna put on the charts so we can hop into the markets and taking a look at what we can come in and speculate the market behavior will be for today. I remember we are speculators, so our job is to speculate and have the probabilities to our side. All right, in front of you, you should be seeing my chart. Welcome, Sean. In front of us, we have the daily. Let me just turn off this things here so we can have basically a naked chart. All right, I follow 12. We're going to be talking about today about 12 assets indices, NASDAQ, S&P, Dow, the crude oil, nat gas, gold, silver, copper, Bitcoin, Euro USD, Pound USD, and the US dollar index. Okay, so let's begin by looking at the market fluctuation today. Let's take a look at the calendar real quick, the economic calendar. Basically today, in the States, we had the core PCE, which everything really came out in consensus. The only thing that kind of was hotter than the previous month was the year over year. It came in 2.9%, and the last month was 2.8%. But everything fell within what the consensus was. So let's see how that is affecting the indices or the markets. But before that, let's take a look at the dollar index and see how its behavior, okay, does impact other assets, because there's a correlation between obviously the currencies and metals, between the dollar index itself, Europe, the pairs, and the metals. And there's also correlation between crude oil and the Canadian US dollar. So you also want to start looking into those. Now, I will talk about that later on. But here is the dollar index fluctuation today after the PCE came out. It did rally to the upside. So what is the PCE telling us? Since the PCE is the preferred gauge of inflation for the Fed, and that's the personal consumption expenditure, which is basically what the consumers are paying for their items. So the consensus was an uptick of 0.2%, and that's what it came in. So there's no additional inflation because of the tariffs being imposed by Trump. So odds for a cut, can they be expected to increment next month? So all of those things we're going to be looking in how the markets have obviously coming and looking at that. So dollar index jumped on the daily candlestick. It fluctuated to the upside. Now, how is that being taken by the indices? We are in a daily candlestick. Overall, long-term trajectory, we see that the market has been just basically on a monthly basis, almost every single day or almost every week, the NASDAQ has been making all-time highs, new all-time highs. And that's what we've seen today, that the market yesterday, it almost reached 24,000. It came as high as 22,800, and it quickly retreated. But are we going to see that effect today? So let's go back now to the daily. We see that the overall trend is to the upside. There has been some, obviously, a pullback on that. But today, the market kind of pushed lower, or was it already lower when the news came out? Profit taking is obviously something that we are contemplating, that after making that high yesterday, market has retraced. So today, what can we come and do to identify levels of support and resistance? We can come in and use basically yesterday's swing high, because it also sits at a psychological level. So we can use that. Now, what tools do we have available on our disposal? So we have the trend-based fib extension tool. So we can use that to measure yesterday's fluctuation and see if that's going to continue to move higher today. Let me just get this here. So we're gonna measure yesterday's move from the low to the high to the low that it has made. Here we see that the tool and the values that it should be showing me more. Let me just get this puppy here, and this one, and this one. All right. So now we're seeing that the tool showing us that basically this movement for it to continue using the golden proportion is right there, right where we have it. So good scenario when we say that most likely the market will come and fluctuate towards that. Well, it could be. So I'm just gonna use a 50 pip difference between my first level of resistance and my second one. So that's that. Now support. Well, we can come in and measure retracement with the tool from the low, well, to the retracement from what opened today. And let's activate some of these levels that are not coming up automatically. All right. So we have here is that let me put the labels on the right. Okay. So now we have here our levels of retracement, and we can use those Fibonacci values. Right now we're at 38.20%. So golden proportion, that's one, and then let's just use yesterday's range for second level of support. If the market is going to continue to retrace, do a correction or a deeper correction, well, we want to measure those previous lows to see if it has momentum to the downside to come and revisit them. So that's how I've done my first asset, NASDAQ. So let's do the other ones real quick. You don't have to use those tools. We can use whichever other ones whichever other ways you want to use them. But since we are in this particular cases where we don't have anything towards our left because we are in all-time highs, then it is best to use the tool. When you have history, when you have something that you can identify as previous double tops, triple tops, dojis, hammers, inverted, things like that, patterns that identify levels of resistance and support, you can use them. But in this case today, let's just use our tools to identify, quantify the move that the market should come and do. In this case, the 61.20% is below the high of yesterday. So I'm not gonna use the tool because I want to use that. Chances are for the market today to come back and retouch that high, which is an all-time high, and perhaps even make a new one, right? That's what we could probably be seeing. Then for support, initial yesterday's range, and then the second level of support, I'm gonna use basically yesterday's open, around yesterday's open. So there we have that, because it's the level that it shows. Looking towards my left, it touches obviously 1, 2, 3, 4, 5 candles immediately. So that's a level where we also see that the market has fluctuated towards that. It was like a resistance at first. Obviously, market did fluctuate above it, but we around that level, around this area is where we saw resistance. So that area now has turned into support. That's why I'm choosing that. All right, let's take a look at the Dow. So the Dow yesterday was basically flat. It didn't really do much of a momentum to the upside. Right, so I'm gonna use 45,800-ish as my first level of resistance. And 46,000, I mean, I doubt that we get that high today anyhow. So I'm just gonna use 45,900, 100-point spread here. Then yesterday's open and leave the second level as is. Speculation, market did open with a tiny gap down. It's being closed. So a continuation to the upside, recovery could also be contemplated. Let's take a look at crude oil. So crude oil has been making higher highs, higher lows. This is our third day. So we're talking about that today may be one of those days that is going to continue to do so. We did open gap down because this candle opened at 64.81 and this probably closed at 64.87. So that's something for us to keep in mind. It did open gap down. It has been closed. A fluctuation to the upside was seen. It is Friday. TGIF. So keep that in mind as well. So I'm just gonna tighten up the level of resistance to 65 and change. Today's swing high. I'm speculating that today crude oil might be looking to fluctuate to the downside. So $64 could be my target as I see weakness on the asset. As we'll obviously we'll break down the time frame lower, but I'm just as an overall, I'm look and identifying those levels of resistance support for daily trading, and then internally we'll break it down in shorter time frames. Then we have here nat gas that yesterday did a strong move to the upside. I mean, this is quite bullish since nat gas, the demand for nat gas actually should be lowering. It should be starting to come down. Now, Trump also did make a deal with the European Union to sell them 700 trillion within of energy. So that's something that we should contemplate and keep it in our radar also. So initially, I'm going to use that swing high, which is almost the same as today, and then 95, 295 my second level. Why 295? I like to use psychological values, and it just happened to be also where this candle closed on the 11th. So it's just coincidence. Call it what you will, but that's how I like to identify those levels. 285 initially. I'm gonna use a pretty tight target or range for nat gas, and then I'm gonna use these two swing highs here. Oh, I think there was a trade left in here somewhere. Oh, there it is. Let me just take that out. Okay. All right. So gold. What is gold scenario for today? I'm looking at 3,500. There was another trade here also. All right, so that's taken out. I'm looking at 3,500 for gold, right? 3,500 for gold. Yesterday, it had a nice fluctuation to the upside. It did open gap down today. Okay, it's been closed. So let's see if today we'll continue to see that bullish momentum to the upside. I mean, 3,400 was rejected with that swing low. So that's something of interest for us. And I'm going to use yesterday's swing low at a second level of support. So looking for this puppy to move. I'm being bullish with gold. One other reason being bullish with gold is that we're starting a new season, the new season in wedding season in India. So demand for gold should be picking up. Okay, for metals indeed. So let's keep that in mind. Now I have here silver, right? Silver closed above 39, right? So this puppy closed at 39.046. So that's an interesting value, but it did open gap down today. It's been closed, and there was a fluctuation to the downside. So buyers held the price of silver within yesterday's range. So that's telling me there's still momentum to the upside. RSI is above 50. Once we hit 60 on the RSI, because right now it's basically below 60, but once we start trending above 60, that will show us momentum to the upside being built or being held, so we could contemplate entering positions, long positions. So I'm gonna leave the same levels that we have here for silver. Copper, well, copper is so erratic. It was doing a nicely uptrend at the last week, and then it just tanked on Wednesday. Did a very strong move, fluctuation to the downside. Yesterday, it also gave us some bearish momentum, but it quickly recovered, and it actually hit our first level of resistance today. We just basically continue with a push to the upside. So here, in this scenario, they come in and measure this entire move, right, and see If this trend that it began that is looking to begin strongly will hold. So here I'm gonna use the Fibonacci golden proportion, which it makes sense to me, and then contracting the chart, we see that we have such a deep move previously. So where can I'm just gonna select 455 as my second level of resistance for copper. Initial support, or let's see if it retraces all of what it's done today and comes back and revisits its open and finds a support around the 445 and does a reversal to the upside, obviously. So 444 is going to be our second level. If it does happen to continue trading lower, we'll see that it'll penetrate into yesterday's body or range, and then it'll continue pushing lower. If it does, the target will be yesterday's swing low, or basically 440. Bitcoin is just so. This looks like a dead cat bounce, but I mean, some might say it is, some might say it's not. To me, it looks like one. So will that mean that Bitcoin will make another leg down? Well, we first need to come and see if it revisits that low that it made on Tuesday. So let's see if that will be the case. And then as far as my second level, I'm going to use 107.5 right below 108 psychological value. So let's see if it's already finding that bottom basically at the low, at this double bottom in reality, and then fluctuates to the upside. Let's see. We'll see as the day progresses. Then we have here the currencies. So I'm looking for the euro to sustain itself north of 116 today, to close actually above that. Looking for 117 target, continue having that target for today, and then 116,200 is going to be our second level of support. Now the pound. Let's take a look at the pound and see where we're going with the pound. So the pound is actually fluctuating to the downside. It's having pressures on behalf of the US dollar index. So I'm going to use yesterday's swing high and bring down my second level of resistance to 135.5. Now support. This is a pretty long wick, and for whatever reason, the market fluctuated all the way down here, and it found lots of buyers, so lots of support here. So that's basically where I'm placing my level of support, and then 134.44, since it's a psychological level for me. So let's see how much lower will the pound trade. See, I have 3 minutes before the market opens, so we're still in good terms. Dollar index within yesterday's inside bar or candle. Will this be a momentum for the dollar index to just fluctuate to the upside because of the all of this good news, or vice versa? Actually, will the dollar index just make another lower leg and just revisit yesterday's low and just come down towards this level of support? If it does that, we'll see a nice push on the metals and the currencies. All right, now that let's take a look at the resistance for this puppy, 98,200 in reality for this, and I'm gonna tighten up my support in just using this level right here. Okay, so now that we've done that, in my case, I break it down to a minute just to see what momentum is being built, right? On an hourly time frame, what scenario has been presented to us. So we saw a consolidation stage right here in these 3 candles, and then a breakout. But that was basically because of the news that we received. So let's see if that's going to be the behavior for the markets today, to break to the upside as we in a few minutes of the bell rings. It looks like it, because if the news were bad, we would already have seen a continuation to the downside. So let's see. Momentum to the upside being built today. Dow also pushing higher. Crude oil. So crude oil in the last previous 1, 2, 3, 4 hours, higher highs, higher lows, intraday, long term. Today, in intraday uptrend, and this particular hour it opened gap up, but it has fluctuated strong to the downside. This is a reversal from this low. So let's see if it has enough momentum to drive it up and above our first level of resistance. Let's take a look at 5 minutes because this. Oh yeah. So in 5 minutes, you want to be aggressive because it was doing basically a consolidation stage. All right, market is open. The market has opened. So if you were to be aggressive, going long here on crude oil, target 65 initially. Nat gas, parabolic movement in that previous 5-minute candle, now retracing. Gold, look, doing a nice pre-move to the upside. Profit taking, continuation with momentum to the upside. RSI below, overbought, consolidation, breakout. If that's the case, if you're looking to make a trade here, then would that be the case if you entered the market now? Let's see. If you were to enter the market now, what the heck? Come on. All right. Why is this thing? Hold on, see. Man. Ah, this thing. That was why. I have that. If you had entered here, all right. So target will be 34.30 and stop this swing low. All right. So target that one. Crude oil. Ooh, crude oil actually is. It did open gap up, but I'm still speculating that this will might just make another move lower. Crude oil. Now the gas is definitely in a parabolic movement to the upside. Gold, well, we have that trading there in gold. Silver still needs to fluctuate towards this basically quadruple top, and this if there was something called as a quadruple top, we have 1, 2, 3, 4 candles basically opening and closing at the same level. So that's a strong level of resistance for us. So will the market come and actually fluctuate towards that particular level right here, then do a little throwback or pullback and then continue momentum to the upside? Copper is trending lower. So short sell below 448. Then we have Bitcoin that is also just retracing deeply. How much more of a retracement would it do? 110,000 psychological. The currencies, the euro, that was a strong move down, found support, and basically they're sitting here around this level. So will that be an indication for momentum to the upside, an entry long? well, we want to be able to find supportive decisions on that. Then we have here the pound doing a breakout right now. This is definitely a breakout. So previous highs taken out. Next target or next level of probable resistance will be around 134.70 if you say to go long. You want to see the dollar index drop, okay, continue to drop as the dollar index breaks this floor or this level of support. Hypothetically, you will see a momentum trade to the upside on the metals and the currencies. All right, so let's go back to the Nasdaq. We want to wait 15 minutes for the market to settle. All right, so on some of the indicators that I used fractals. Now, fractals are very simple. They just identify high points and low points, but they are also a good way to enter the market if you have identified the fractal high. For example, in this case, you want to have two candles to the right that have been finished, right? And at this moment, since we are at a low level where we can identify that that's a level of support, and we identify that fractal high, well, we want to wait at least for this candle to see where is it going to close. If it closes at that same level, we will have the cursor, and the next candle actually opens green, looking to move higher. We'll go long that particular candle, and our target will be that fractal high. Now, if the candle happens to be red, like it's doing so, and closes below this level towards the fractal low, it's breaking a level of support, and then you might see if it does a pullback once it fluctuates below that level. There's a pullback towards the now will be resistance, and then reverses and continues to move south. That will be an entry. But right now we're still waiting for this candle to show us the direction of it, and it seems to be catching a bid to the upside. Now we can also come in and apply the VWAP. So the VWAP is a volume weighted average price. The VWAP is not a lagging indicator. It gives us the volume weighted average price by volume, meaning that how many traders obviously have been in the market, and the price that they will either buy or sell will be the VWAP. And the VWAP is this blue line here. It has two bands, an upper band and a lower band, right? And that is the VWAP. So now in this case, that this particular candle has broken our level of support, well, that would have been an entry short, right? Because it's clearly a level of support that is, if it's broken, it's going to continue to trend lower. Now it hasn't, the time frame hasn't ended. We still have 2 minutes in this candle. So what are the chances for it to come in and say it's going to close above that? It could recover. So analyzing this particular scenario, if it does happen to recover, let me just make this chart wider. So if it does happen to pull back all the way back above where I'm just gonna draw a line here. So this color, right? So this is the support that it was showing us. The market was showing us. It has been penetrated. It's being violated. It hasn't been broken yet. To be broken, we need to close below it. But in this particular case, when we have a minute left, if this candle fluctuation shows us that it crossed this level of support and found buyers at around a psychological value, then it should tell you that there are more buyers than sellers. And if it closes above this yellow line, then it will give us another additional reason of why we should consider entering the market long, because it will be a shift of force, or from sellers to buyers. But since also we are in within the opening of the market, we want to allow the dust to settle. So 15 minutes, 30 minutes for the dust to settle. Is that going to be enough for us to for this to happen? You be the judge. I will say 15 to 30 minutes. You don't want to take any trades when market opens, because, like I said, it's too volatile, and you could have entered the market short and would have made money. But what if you had entered the market long? You would have taken, you were stopped out. So that's why I always like to just look at the markets, what their behavior is, their actions. You're trying to identify levels like such now in this time frame of 5 minutes, levels of resistance and support, dynamic ones, because they'll really be changing. So let's just take a look at other assets and see what we can expect, or what we can speculate to see or to find. All right. Another way for us to do a strategy by using the VWAP will encounter using the bands. So in this case, we see that the market is right now is hitting the lower VWAP band, and this band right now is acting as a dynamic level of resistance. So we can come in, speculate that the market will come to the band and do a reversal, right? Like it's doing so much so right now. So will it do this? Will it reverse off the band and then look to trade lower? Well, if we had obviously already some time into the trading session, then we will say that it is we are in normal conditions of trading conditions. But since we are within the time frame of the market opening, we may not see this at all, or we could see it. There now obviously the chances are so divided, 50-50. But let's see what will happen. Obviously the market has been around this level previously, right? So it actually fluctuated to the upside. All right, so let's see. 3 minutes is penetrating the band. The other scenario is that, yeah, we wait for this candle to finish, to close, and if it opens, if it closes inside the band, right, like as it's penetrating right now, then what can we do? We can come in and take a position long, and the target would be obviously the upper band, the VWAP. This right here would be your target if you enter long, right? The VWAP will be your target around 6,500. 6,500 is psychological value, right? Where the market has been before, so that could be also a possibility. Then we have the Dow. The Dow bouncing off the VWAP once, twice to the upside. If the momentum is strong, like it's showing, then the market is beginning to walk the upper band. That will be also for the Bollinger Bands, but obviously we want to wait and see where this candle will close, because we could be in a position where we enter the market long, because the market is the asset is showing us strong momentum to the upside. So scalping opportunities, 675 target, 65700 once we reach 675, 45700, that will be obviously the initial scalping target if we decide to go long. Crude oil, okay, still just sideways trading here, not giving us too much opportunities to enter the market. Nat gas, all right, so nat gas, it is tanking. It broke that level of support the target would have been obviously our first level of support. Now, what can we speculate the market will do? We could see the market will do a pullback to the now what would be resistance, and then trend lower. But if the as we're seeing now, the volume column is continuing to increment, and we're seeing that a push to the downside is stronger. So let's see where this candle closes, because that would also give us an indication. If it opens gap down, then you understand that there's more pressure being applied to nat gas, more sellers coming in, so that'll drive obviously the asset lower. If it opens gap up, then we could say, okay, a shift of direction could be down, or open gap down. So the asset is, I initially close it and then continue its trajectory lower. Let's see if that will be the case. So it's being closed. Now we have the gap closed, and let's see if it'll continue to push lower, or is this going to reverse and then come towards the level of 285, which was basically before a level of support, now a level of resistance. Let's see if it'll do that. Now continue to do this and do this right here. All right, so it is pushing higher. Let's see if it'll do pull back off of that level of resistance, which is before support, is penetrated the level of resistance, back now to support. Below it, let's see if it's now that momentum to the downside being applied. Dollar index is getting stronger though, so catching a bit there also. Let's see. Oh, so this actually moved to the upside. Strong momentum. Buyers coming in. Let's take a look at gold. So that gold trade that we've had applied earlier, we still haven't hit our target yet, but we are on the direct direction of it. And then we have here silver, that it did a bit of what we speculated, but now it's entering a sell-off mode. Copper bouncing off reversal of the medium or the VWAP. That was another trade right there if we had catch it before. So if we saw that the reversal hitting the VWAP, bouncing off of it and moving higher. All right, Bitcoin 110,000 met and more, continue to push lower. So the target will be our first level of support that we had there for it. Then we have here, all right, so the euro is fluctuating between the VWAP and the lower band. Okay, and it has done a reversal of the VWAP on this candle, pushing lower, but it's inside the range of the previous candle. So this could be just an entering phase of consolidation for the euro. The pound, now the lower band is turning to be a level of resistance, dynamic level of resistance. Equal highs, equal lows. Will do a breakout or a breakdown. Well, if the dollar index decides to fluctuate even lower, then we'll see that. But this candle actually up and gap up strongly, but has been closed, but not doing much more of damage anyhow. Let's take a look at the Nasdaq. So the Nasdaq did continue to push lower. Let's take this out. Need that anymore. Now we basically passed the 15 minutes, and this puppy is showing us that it wants to trend lower. So will our second level of support be met today? It's right below 23,500, and it's looking like it. All right, so we have the S&P as it was predicted. It pushed lower. It initially did a flush out some buyers here with the sell. So bouncing off our level of support, it penetrated 6480 next target. All right, so it didn't quite reach 45,700 the Dow, because now it's going to retrace, push lower. It penetrated our level of the VWAP. Will it reverse from the VWAP, or will it just push down? Well, its peers is pushing lower, so it'll follow through. Crude oil. So crude oil is above the upper band. So if there's supposed to be a correlation, an inverse correlation between the crude oil and Nasdaq. So if crude oil drops, Nasdaq should be pushing higher. But in this particular scenario, it's not doing that. Well, now it's in the green and crude oil is in the red. So okay, so there goes the correlation. Because and the reason being is that obviously in Nasdaq there's a lot of companies, energy companies, Halliburton, Schlumberger, Baroid, all of them trading there. Let's take a look at the nat gas. So it did fluctuate lower, but now it's looking to push higher. So let's see what will happen. It's looking to push higher here. All right, gold. Our trading gold is about to be met. 430 is our target. That's where we entered it. Then silver still pushing higher, walking that above the upper band. We are basically at that level of that resistance that has been met quite some time, all day long, for the last half an hour or more, 10, 20, 30, 40, for the last hour, this around this level resistance has been met. So I'm gonna say this level. All right. So what do we want to see done here? Well, we want to see the market penetrate this level, right? Penetrate it, do a throwback to it, and then reverse, and then off to the races. That's what we want to see in this particular asset, and it's looking mighty strong. I mean, RSI is not even entering overbought. We have consecutive green candles or green columns in volume, but not as much volume as we wanted to. So here we are. So we fluctuate above that level. There's that fluctuation to the upside. Let's see the throwback to what now will be that level of support for it, and then off to the races. Or it could be off to the races right now, because the throwback has already been done, or is happening right now as we speak, because with the candle is retracing, and off to the races. So if you were to enter a trade here, target, initial target, if you want to do a scalp, it will be that one. Stop, the upper band. Now if you want to do something more initially, but I will initially just go this way, because like I said, look, this could just retrace and hit our stop loss now, which is the upper band, and that'll be done. And that's probably what's going to happen. You're probably going to get stopped out here on this trade, because this could probably be the throwback that I was talking about, and then off to the races. But it's already penetrated the level. Actually, all right, so that's it. We got stopped out on this particular scenario. So it's penetrating back into it. So if you were to be aggressive and decided to enter short, your VWAP will be the target. If you decide to enter long, 39.05 will be your target. Then we have copper bouncing off. So it bounces one time off the VWAP, flotation to the upside, retracement, rejected the VWAP, right? So starting to making higher lows. Well, no, because it's higher. There's a low, this is a low. So is it going to continue to push lower now? Come down to a VWAP again and retest it again. Let's see other assets. Bitcoin keeps pushing lower. So 109 psychological. The currencies, euro pushing higher. Oh baby, here he goes, off to the races. Off to the races goes. Pound off to the races. Dollar index dropping. Flanco. All right, Nasdaq, last run before we finish our session here, and we have here pushing lower. Nasdaq, it is Friday, so keep that in mind also, and we might see a run to the hills at the end of the day. That could be also a scenario. So S&P also trending below our level of support. Dow fluctuating on the lower band. Crude oil. All right, so crude oil finally showing us that momentum to the downside being applied. Nat gas scenario to the upside. Gold. All right, so gold, we're 250 away from the target. Nice momentum to the upside. It was a nice trade right here. Nice trades right here if you're into it. Dollar index is appreciating, is recovering actually. So let's see if we'll apply pressure on gold, or are we gonna be able to see gold hit that target or 45.30. We still have 2 minutes left, which is basically what I have here on the session for today, and see if how close to the target will we come on to this in this minute and a half that we have left. All right, so to remind you again, every month, every week, every day actually, from Monday to Friday, we're gonna be doing this half an hour prior to the US session, to the US session open. Then once it opens, then we start looking for opportunities, the market behavior, identify obviously to that time the levels of probable level of support and resistance, which are targets, daily targets. And in between that, we'll look at scalping, doing some scalp trades like we did. Like this is not actually a scalping trade, because most likely we have been out already a long time ago. But the scenario the market is giving us